may feel like you're building your business and you're not making any money, but when we go to file taxes, you're going to need some cash.
Are you an RV person, or are you just RV life curious, wondering how people live in a tiny space with their family 24/7? Either way, this is a podcast for you. My name is Kate White, and I travel full-time with my family and 2 kids and the dog in an RV. Every week, I sit down either with a fellow RV woman to discuss why she chose RV life and how she has changed on the road, or with a special guest who speaks on a topic relevant to travel life. Pull a chair up to the fire and let's chat. Hello, Penny, and welcome to the RV Queens podcast. How are you today?
I am fantastic. I feel like I've been waiting to be interviewed by you on your podcast since the day I met you. So the day is finally here.
Oh my gosh.
And I've seen so many of the top shelf guests that have come before me, and I'm so honored to be among those RV queens that have.
You are so sweet. Yes, and I've met so many fantastic humans on the road, and I'm glad I'm finally able to have you on. Because we met last year at the RV Creating Yet conference in Camp Margaritaville. And I think you knew more about podcasting than I did. Like at the time I was kind of like, I think I'm going to start a podcast. And you sent me all these resources and you were super helpful. So thank you for, helping me kick it off behind the scenes. Okay. So we're going to get into your financial wizardry in a few minutes, but I'd love to chat at the start here about your life as an RVer. You've been, in the full-time RV life for a couple years here now. Tell us how you got into this.
So thank you so much. I love this story, and I'm so glad for the opportunity to share it, and maybe it'll resonate with somebody else that wants to go through this process. My husband and I, one of us would mention something and it seemed crazy, and the other didn't react negatively, and then later, the other one would mention something that sounded crazy, and the first one wouldn't react like it was out of this world, and that's really what started us on this RV journey. And we're tired of being homeowners, tired of getting our homeowners canceled, and the inspections, and it just we had a lot of stuff that we had a lot of space. We weren't using all the stuff, and we just decided that we wanted to live a smaller lifestyle. And we got rid of everything, and we moved into the RV, and we ended up moving in a lot sooner than we realized. We had a plan to do things longer term, and because of those moves that we made, moving into the RV early, my husband was able to take advantage of early retirement from his job. And as soon as he started going through the process of being retired early, we started looking at ways for me to be able to leave my job early. And, the whole thing kicked off 3 years earlier than we anticipated. So I left my full-time job in June, and we hit the road a week ago for a 5-month trip. And that's something we never would have been able to do if we hadn't started the process to move into an RV, and not really knowing what everything was going to, things that were going to transpire because of moves that we made in preparation of it. And I think that's the way that we like to live our lifestyle, is put ourselves out there and make some moves ahead of knowing how it's all going to turn out, and then be ready for twists and turns. And if they're right for us, we take them.
Okay, so you've been stationary in the Florida area so far until your trip now. So have you guys RV'd whenever you did have a house? Are you familiar with the RV life at all? Or are you just jumping in, you live in an RV stationary, and now you're traveling. Tell us about that.
So we started out at the very beginning, and when we got married, we started out like everybody else does. We started in a tent, and then moved up to a pop-up, and then moved up to a casita, which is it's a eggshell, egg crate.
Oh, yeah.
They call it an egg, yeah. And they're all fiberglass, and it was great because we didn't have to crank it up. And when we got that, we decided to, Florida state parks are just some of the most amazing state parks. And we scheduled a year before we moved into our current RV. And every long weekend, every month that had a long weekend, we took an extra day and we went to a different state park in Florida. And we really barely scratched the surface. But we knew from doing that it was something that we loved, and that we'd be able to, we needed a little bit more than 16 feet to do it. And we have a dog and a cat. And so we ended up in a 32-foot travel trailer, and it's worked great for living stationary and also moving. And I think eventually we'll switch to a motorized RV, but we basically tested it out as weekend warriors and realized we really could do it full time.
I love that. A lot of people start that way. Me and my husband just went full immersion. So there's a lot of other people that kind of like take a more reasonable approach and dip your toe in like you did. So that's smart. Okay, so you run full-time business from the road. Tell me about working and traveling, especially now that you're kind of like spinning up your travel. Like, how has that transition gone for you?
So this is so timely. It's funny. Like we haven't even done this a week yet, and I'm already learning so much about how to do it. And it's working really well, because we already kind of have a division of labor in terms of, I take care of the inside, my husband takes care of the outside. And if I know basically when I'm eating breakfast in the morning, okay, we're going to leave at this time, which means I need to start my, inside countdown at this time. And it's, and I'm backing it up to, the time that it is. And I can say, okay, I use the Pomodoro method for work, which means I work 25 minutes, super concentrated, and then take a 5-minute break. So I'll say, oh, okay, I can do 3 Pomodoros this morning before it's time for me to initiate countdown of getting the RV ready to go. And if I can, my goal every day, regardless, is 4 Pomodoros, which is essentially 2 hours of concentrated work. And it's been working great. But if I don't ask those questions and lay it out ahead of time, I may not get any work done before it's time to leave. And then we get there and it's like, you want to do this and you want to do that. And
yeah.
And if I know I can do 4 a day, I'm free to do whatever I need to do.
That's awesome. How quick are you traveling now?
We're doing 1-tank trips, essentially. So we left Orlando, Florida, and we're on our way to Arizona right now. And so we're traveling about 3 to 4 days at a time, and then stopping over. So we're going to spend a little over a week in New Orleans, which is where we are now, and then we're on our way to San Antonio, and we'll be there for a little over a week, and then we're working our way west. And so it's the travel days are not that long, and it's a lot less stressful, and we're retired. I mean, we are both working. We're working things that we want to do instead of, having to show up to work. But doing 1 tank, basically, it's a very comfortable pace, and we're not in a big hurry to get where we're going, and we have things that we want to do on the way. And that was one of the things. I mean, we started this process because we watched so many YouTube videos of, families and And we heard so many of them say, the first year we burned ourselves out, and we learned that, either move more slowly or, have really good breaks. And so we're still testing it, but, just a week in, we're very comfortable with our pace. And it means that we can both, meet our obligations. Like I had a video call this morning with an existing client, and that went great. And I had a call before this with a new client, and that went great. And as long as I'm available, and I could have done both of those and still had a travel day.
Right.
I could have done one in the morning and then one, after we got where we were going. And that seems to really work.
That's awesome. And especially something that we found, because, I am a podcast host, and then my husband works, I don't know, quasi full-time to kind of fund our travels. And we found that if we pack everything up, like literally disconnect it all, fill the tank with some water, turn on the water pump, we can get a little bit of work done in the mornings before we leave. Even if we have like a 6-hour travel day, we have started having longer travel days. When we started though, we had 3 to 4 hour travel days, and that's kind of a sweet spot. Especially when you're just getting started. It feels very manageable. So very wise. Okay. So you're a CPA, and at this point you have a very specific niche, which congratulations. Sometimes it's like hard to find that, right? But your career has had several phases to it. So tell us about your professional background and the journey you've taken to where you are today.
Yeah, that's awesome. Thank you. I feel like I reinvent myself every once in a while. And,
Me too.
And it seems to fit, and the pieces all go the way that they're supposed to eventually without necessarily having a whole roadmap done. But I started out as a banker, and I worked in a bank, and I did met with clients, and I did a lot of underwriting. So I reviewed applications for loans. And then I realized that banking was turning to a point where it would all be about sales. And I decided that wasn't that much fun. And I went on to become an accountant. And I really enjoyed that. And while I was going through the process to become an accountant, I found out that the FBI hired accountants. And I had no idea that was an option. And turns out, if you understand banking and you're an accountant, it makes it really good to become a forensic accountant. So start out with banking, then move to accounting, then use both of those skills to be a forensic accountant for the FBI for 20 years.
What is a forensic accountant?
So I would review people's bank activity and their mortgage applications and look for the flow of money. So I would see illegal money coming into somebody's account, and I would see how they spent the money. Or I would review a mortgage application and determine, this is fraudulent right here. They said they made this much money, and here they make this much money, and so this is loan fraud.
That is so cool. And also scary.
So forensic just means that at the time I could go into court and testify as an expert witness about money and the flow of money.
I was picturing you like, I don't know anything about the FBI and how all that stuff works. So I was like picturing you with all the detectives and investigators and FBI agents, and you're the one that's like sitting at the computer that actually knows what's happening.
That's not far off. So what we try to think is the forensic accountants is, we try to free up the agents so that they can go out and, do things that we can't do, like follow people around and arrest people and put a wire on somebody so that they, have a conversation with the bad guy and get the bad guy to say something. And then we read the transcript of that kind of thing and then say, oh, he said that $10,000 that went from this account to that account was for this reason. And then we find the supporting documentation for this side of the 10,000 and that side of the 10,000. And then we can go into court and say, well, he said this on the wire and we found this piece of it and we found that piece of it. And here you go.
Oh my gosh. I had no idea. That is incredible. Okay, cool. So how did you take all that experience? And because you worked there for a while,
20
right?
years.
Okay, 20 years. How did you, what was the phase then when you stepped out on your own?
Well, first of all, COVID gave me the opportunity to work from home, which I had never, I'd always wanted to do that. I always wanted to try. And we were allowed to do it for 6 months. And I got through 2 years worth of backlog work in 6 months of working from home 50% of the time. And my office, at the end of the 6 months, had no interest whatsoever in continuing. They were not impressed at that, and they wanted people there. And right about that time, my husband started thinking he was going to retire, and so I started looking for a way out. And my husband and I are big fans of the personal finance movement. And matter of fact, we're in New Orleans for Fincon, which is where money and media meet. So it's one of the largest conferences of financial bloggers in the United States. And I went to a local personal finance meeting and met someone very much like me who had a virtual bookkeeping business. And I was like, oh, that's it. And so I had to use QuickBooks in my work for the FBI. And I realized so much of what I did for reconstructing what happened, using people's bank transactions is very similar to helping people with their business bookkeeping. And I have, basically taken a year's worth of data for a bookkeeping client and organized it to the point where they could file a tax return. And it used up most of my forensic accounting skills to do that.
Fascinating. Okay, why did you name your agency Fee Fi Fo Fum?
So FE is for federal employees, which is what I used to be. And FI is for financial independence. And FUM is, the clean version of it is forget you money. And it's the amount of money that you need to have in the bank so that you can leave your job if you choose. It gives you the option. Basically, once you have enough FU money, it's work optional. And people can, leave their job and do something else, or they can take a short-term sabbatical from their work and then go back later. Well, that's most of it. The FO, I didn't really. But I started to do Fee Fi Fo Fum.
Yeah, might as well roll with it. That's right. So what is the 4% rule, which I noticed on your logo, by the way?
So 4% is when you have your FU money in the bank, and if you withdraw just 4% of it every year, you will never run out of money. So so if you have $1 million in the bank that you can withdraw from, and you organize your life because you've gone to enough personal finance events and read enough personal finance books and listened to Ramit Sethi on his podcast, if you can figure out how to live on $40,000 a year, you are free to leave your job.
I love it. Okay. And you're especially focused on working with content creators and course creators right now. Why did you decide to focus on that clientele?
The transformation that our full-time RVers who were content creators helped me and they inspired my husband and I to transform our lives the way that they had meant that they were the people that I most identified with. And when you're picking a niche and you have to work with someone. So my goal was to find a way to work with the people that I wanted to spend the most time with.
Awesome. I love that. Well, and yeah, that brings me to, the listeners, as you know, of this podcast are RV women. And we also have what's called the Platinum Circle in the RV Queens community. And these are women that are running businesses while living the RV life, including a lot of content creators. So what's your number one advice that you'd like to give to RV women who want to create consistent cash flow and really start honing in on cleaning up their money life?
That is such an awesome question. And I'm so glad you asked me. So separating your business expenses from your personal expenses is my number one tip, because if you track them separately, you're able to see how successful your business is. But if you have all your business transactions running through your personal accounts, you're not able to see how successful you are.
Hey friends, pardon the interruption. This is a sponsored episode and it's time for a short ad break. I love spending time outside with my kids, especially when we're traveling in the RV. Recently, we had a blast trying out some of Elikai Outdoors' amazing outdoor games. Their games are inspired by nature and are incredibly durable, which means you can create lasting memories with your loved ones. And the best part? They're carrying cases. They're compact enough to take on the road with you. Be sure to check them out at elikai.com/RVqueens and use the code RVqueens10 to enjoy a discount of 10% off your order.
A lot of people I've asked, and I've had this question for myself as a content creator, is when do you need to create an LLC versus just, filing under my, social security number? What is that called? S Corp something?
Well, S Corp is the fullest extent of creating a separate entity for your business. So the levels are sole proprietorship, which is
that's what I was thinking. Yeah,
anybody can start at the lowest level of sole proprietorship, and as a sole proprietor, you can get a employer identification number, which means when you work with a business and they ask you to fill out a form, the W-9 form, having an EIN means you're not giving your social security number to everybody. You're giving them just your EIN to your business. It doesn't create a spill situation with your social security number. Then the next level is, and this is just for one-person businesses. It's a little bit different if you have a two-person business. But the next level is a limited liability company, and it's hard to know when you really need to switch from a sole proprietor to a limited liability company or LLC. But one of the things you can do is, in Florida, for example, you can be a sole proprietor for 5 years, and you pay a small sum, and you have authorization to do business under that, doing business as sole proprietorship for 5 years. Once you have to renew that, you might as well. You've been in business for 5 years, you might as well go ahead and get an LLC. Now, LLC, you have to renew every year. So in Florida, it's $125 every year, or $138, to renew every year. So when you're first starting out, you don't necessarily need to have that expense every year. But once you've been in business for 5 years, you'll know. Now, S Corporation is what happens when, as you're an LLC, you elect within the IRS system to be treated as an S corporation. And so you don't change your name. You do have to get a new EIN just for the LLC that's separate from the one that you had before. And that point, there's a couple of reasons that you would benefit from switching to that. And one of them is when your gross income or gross revenue from your business, your top line revenue gets to be $125,000, IRS is going to give you extra scrutiny. They're going to want to know how you're taking care of your tax savings at that point. And if you continue as an LLC or sole proprietor with revenue of $125,000, you're at a higher risk of audit. So defensively, switching to an S corporation at about $100,000 steady is going to benefit you. The problem with an S corporation is once you go that way, you pretty much have to stay that way. It is possible to back out of it, but I'm not even at the point where I'm able to help somebody. Basically, you would dissolve the S corporation, you become a C corporation, and then you have to switch back to an LLC. It's paperwork, I'm sure, is amazing. So the reason you have to wait until you're consistently over 100,000 is because as a requirement of being an S corporation, you have to put yourself on payroll. And that's how you deal with IRS scrutiny is they know that when you're on payroll, you're having all your withholdings taken care of every other week, and they don't have to worry about it. So if your business has ups and downs, you are going to still continue to have to pay yourself salary all the way along. And your salary is based on what IRS calls reasonable compensation. They don't tell you how to figure that out, but it's based on what you would pay somebody as an employee to do exactly what you're doing. So if you say reasonable compensation, I would pay somebody $65,000 to do what I'm doing now. And you get to the point where you're ups and downs and you're continuing to work full time and your business only brings in enough to pay you a salary of $50,000, you're going to keep having to pay yourself a salary of $60,000, sorry. So, that's a decision that you make. You might go a few years at 100,000 before you make the switch. I quite often end up with new clients who made the switch like immediately, and then COVID happened, and and they're still trying to recover. I can't tell you, probably the last 10 new clients that I talked to that said, "Oh yeah, I want to do this," and they did it, and then COVID happened, and they didn't have COVID-proof businesses, and so they had to turn off their payroll, and now they don't know what's going to happen with IRS because they turned off payroll.
I mean, you got to think the IRS is still like, there's so much hairiness with COVID and things that happened to people's businesses at that time. It's like, oh man, that's a tough one. I was about to say you would think the IRS would have some grace on people, but I'm not sure they're in that business. Okay, well, and speaking of your early clients, like your new clients, what are the common money mistakes that you see new clients, make whenever you start working with them, or like having had made before they work with you that you're like, oof, okay, you're gonna clean that one up.
Yeah. So back to taxes. Not saving money, not having a plan, not understanding that you may feel like you're building your business and you're not making any money, but when we go to file taxes, you're going to need some cash. And I recommend every time you receive money, that you set aside 15%. And I've had clients I had a brand new client who started off that way from day one. And it was touch and go, but and her business struggled in the first year, but she had enough to pay her taxes that she had saved up. And she'd always been a W-2 employee. She had no idea that she was going to be able to do it. And she did. And then I have clients who've been in trouble with IRS in the past, and then they come to me and I tell them, hey, the first thing I need you to do is start setting aside 15%. And again, for the first time in the 10 years that they'd had their business, they had enough money to pay their tax bill after the first year working with me. And knowing that you already have the money in the bank, they don't necessarily need to start making estimated payments in the beginning. So if the 15% was too much, you still have control over the money.
My husband and I have we were W-2 employees up until 2020, and we've been self-employed for, since then. And reading the Mike Michalowicz book, Profit First, was like transformational for us, because it's just it like flips this mindset where whenever you're first running your own business, you're like, here's all my expenses that I have to pay. And then like maybe there's a little bit left that I feel like I can pull for an income. And the Profit First method, and you'll have to help me explain this probably in better detail, but it's basically like you need to think about the revenue that's coming in and just automatically put it in these buckets so you get out of panic mode, right? It seems like you're familiar with this framework. How can you put that in a nutshell for me?
So I am a huge fan of using percentages to do a lot of the things that, because people are panicked. They've never had to do this before. They have no idea. They're so they want to do this and they're so excited about, but it's such a gray area for them. And if you just say use percentages, like no matter what, 50% goes to owner compensation. If so many people don't know what's reasonable for expenses for your business. It's like you could go out and pay for that $5,000 training program, but if you know what your business is likely to earn, and say it's, your first year in business, you think your business is going to earn $10,000. Well, 30% of that is what's reasonable for you to use for expenses. So that means $3,000. You could do, if you had no other expenses, you might be able to do a $3,000 program. But a $5,000 program would mean that you would need to invest your personal funds to make up the difference. The 15% is what you need for taxes. And it may not be perfect, but it is the closest thing to, if you're not quite there, you can just throw in a little bit more money. And if you went over, you can just have extra profit. And then the balance of all that, those percentages, what it takes to get to 100% is what you set aside for profit. And profit allows you to invest in something like that $5,000 program. And you can use it year after year until you get to the 5,000, and then you have the cash flow to do that program. And Profit First works really well in conjunction with Ramit Sethi's conscious spending plan, which is another set of percentages. And so the 50% that you take out of your business that goes into your personal bucket, and then there are percentages for that area. And it seems to work really well. And I think those coordinate perfectly. And it means that you can back into the numbers. And if you go through the process and you figure out, well, okay, 10,000 gives me 5,000 to, my personal funds, and 50% of that should go to my fixed expenses. And, this much, 10% should go into investments and 10% should go into savings. And then 30%, I think 30% is the rest of it. Yeah. It should be, guilt-free spending. Okay. And you figure out, well, based on 10,000 in my business flowing through to my personal and all these buckets. And it's like, wait, I need my guilt-free spending to be more. So then you go, oh, well, if it's, maybe I can sell something more and maybe I can get my revenue up to 15,000. Well, how does that 15,000 flow all the way down to where it needs to be? Oh, that's my number. So now you know what it's going to, you know what your business is going to take to produce what you want to produce in your personal budget.
Oh my gosh. I'm not familiar with the Ramit Sethi, but I can totally see, or you said it was called Ramit Sethi Conscious Spending Plan. I can totally see what you're saying, though, about using profit first for the business framework for your money flowing in there. And then on the personal side, having an additional framework. And I think that could free people up from kind of the panic mode that you talked about. Like, ooh, I don't know if I'm going to have enough money. Both of these frameworks really just flip it on the head and are like, well, let's just talk about the life that we want to live and the business we want to run and have these revenue goals and, like just try to make the money, and not have as much like, this is this big, scary cloud of unknown. That's super helpful.
It also frees you up because if you're a W-2 employee and you think you need to replace your salary with your business, this will teach you that you may not need to. You can set up your finances the way you want and it'll tell you what the number is. And it may not be the same because most people, hopefully, a lot of people, W-2 employees, are setting aside a ton of money in retirement savings. And if you're saving in retirement, that's money that you already aren't using to live on. So you don't actually need to, in your first few years of business, you don't actually need to earn that much.
Mm-hmm. Right. Yeah.
You just need to replace what you're actually living on.
And it's not as, I remember the last, year or so when I was an employee, I had this idea for my own business and all this stuff. But for some reason, like insurance, I was the breadwinner at the time. And having to figure out how to pay for insurance when you run a new business, it was like a true concern that it kept me in my job probably for longer than I should have been there. How do you direct, especially, self-employed people and people with variable incomes, to think about insurance? And do you have any plans that you like to recommend?
So as somebody in the personal finance space, I recommend high deductible health plans and with a health savings account. Health savings accounts are one of the most favorite thing of people in personal finance because they call it the triple tax advantage. So if you are able to, say, put aside $3,000 every year to put in your health savings account, and you don't need that for your health for that year. You're just going to pay your premium, and you're able to cash flow any expenses. That $3,000 just sits there in your account, and it's invested, and you can leave it there. Then the next year, say the same thing happened to the point where you get, say, $30,000 in that health savings account. Every year that you've had that high deductible health plan, you save all your receipts. When you cash flow your own health expenses, there is no limit on how long you can use those receipts. So if you have the program for 10 years, you can go back to day one and submit all of your receipts, and you get that money refunded to you from your health savings account without any tax consequences. And when you're 65, you can take money out of your HSA for any reason. You will have to report it as taxable income. But in those 10 years leading up to the scenario that I gave, you get a $3,000 tax deduction because your contribution to your HSA reduces your taxable income. And it grows tax-free as well. So that, it continues to grow. The longer you can cash flow it, the better. Maybe somebody can only, they contribute $3,000, but maybe they have to dip into it for $1,000. Then you submit that receipt for $1,000 and you get money refunded to you without any tax consequences. But the $2,000 continues to sit there in the fund. And that's my absolute favorite. And, so I am, in addition to helping people with bookkeeping and tax preparation, I'm a tax strategist, and the HSA and the high deductible health plan are one of the favorite tax strategies of people who work with tax strategy clients that have their own businesses.
Yeah, and I can definitely see why. We have an HSA. I didn't realize that money grows. That's awesome.
Yeah, it's invested.
Oh, that's so great. Okay, so for people that are listening and they're sitting there hearing you talk about these, financial and insurance topics, and they're like, whoa, I need Penny in my life. I just need help in this area. Paint the picture of how you work with people. Like, what are the different services you provide to help people get their money straightened out?
So at the highest level, I do tax strategy, which means if you've been in business for a couple of years, I'll look at your tax returns. I'll look at hopefully they're using QuickBooks, and I'll look at that and come up with some scenarios, give you a rough idea how much you could save by implementing a tax strategy. And then I'll work with you over the year to do all the things that you need to do to be in compliance with that tax strategy. Then I also offer tax preparation, and which is, if you're an S corporation, by the way, that's an extra tax return. So I can help people with their it's called the 1120S, so it's just for your S corporation, and with your personal taxes. And I can also monitor your tax notices with IRS, so that I would get notification if you're about to get a tax notice, and help you do an amended tax return to resolve any situation before you have to deal with it. And then I also offer bookkeeping, which I love doing the bookkeeping piece of it because I know that everything is clean when I go to do the taxes. Like, I know everything is, where it's supposed to be already. And I'm better able to help people make their quarterly estimated tax payments so that they, and that's also a tax planning feature. And so for bookkeeping, I work with, I go through people's transactions in QuickBooks and their bank accounts every month and make sure that all of those transactions are coded the way that they are. And if you have to invoice people, I'll help people make sure that they're getting paid the way that they need to be paid. And I'll review their bank statements to make sure that whatever the bank says is in your account matches up with what's actually in QuickBooks. And that's actually a bigger deal if you use, a lot of content creators use PayPal as a payment service. And in QuickBooks, there's a unusual function that can double, revenue in QuickBooks. And it's, has to do with some odd functionality of PayPal. And so, I help with that, and how that turns out is that it appears to be that you've gotten more revenue than you really have, which would create a bigger tax bill than you should have. And so I am thinking of a particular client that had that problem. And if he had somebody reconciling his bank statement to QuickBooks in the first month of the year, he would have caught immediately that PayPal was was doubling the transactions, and it can easily be rectified. So I love looking at the whole thing. I mean, my favorite clients are the ones that have me do their bookkeeping, their tax preparation, and their tax planning, because if they ask me a question about how a particular transaction gets, in the nitty-gritty, how it gets recorded, I can take it all the way through and explain why it's important from a tax planning point of view.
Yeah, that makes sense. Having less hands in the pot. Usually it just leads to clarity and, consistency. So, amazing. Well, thank you so much for all the golden nuggets of wisdom and financial advice today. I'm going to circle us back around here to RV life in my last couple questions. So I'm curious to hear about when you think back to Penny before RV life, when you had really kind of become minimalistic and decided to live in a trailer with your husband, and you think to Penny now, who's like living the travel life dream, 1 week in, what has changed?
Oh my goodness. So much. And I'd like to say that we're living a bigger life because we're in smaller spaces. It's so many good things have happened to us, because we've been open to making changes, and once you start making changes, it's easier to make the next change. And I really truly don't believe that I would be free from my job if we hadn't moved into an RV. I think it really kick-started things for us, and I'm loving the freedom.
The slogan for the show is a podcast about unexpected riches. So I'm curious to hear, what's the unexpected richness you have found from RV life?
I spent all summer working in Florida, working outside, and I feel so calm, like sitting outside, even though it's hot. And it just is so different than, working in an office. And I don't think I really imagined, I guess I thought that I would be working inside my RV. And I mostly try to work outside, and that really surprised me how much I enjoy being outside and enjoying working outside. It's funny. I never would have expected it. And
yeah, I can attest to that too. It's like a visceral response to like being outside more. It's like your body's just like, yeah, that's right. This is how it should be. That's great. All right, Penny, will you please share with us how we can connect with you on the internet?
Awesome. Thank you. So I would love it if you would DM me on Instagram. My handle is fum personal CFO. And if you heard this episode on the show and you have any questions, or you want to, talk to me about working together, I would love it if you would contact me on Instagram.
Okay, that's awesome. Well, thank you again, Penny. I really loved our chat today. I can honestly say I don't think I've enjoyed a conversation with a CPA as much as this one. No offense.
None taken.
All right. Well, I hope to see you on the road soon.
Yes.
Bye,
Bye-bye.
Penny.
All right, my friends, that concludes today's episode. Thank you so much for being here and for listening and for being an awesome part of the RV Queens community. If you could please like and subscribe on whatever platform you're listening on, that would be awesome. And if you want to have more conversations like this, you can head to rvqueenspodcast.com/community and find your RV Queens circle today. All right, guys, I'll see you next week, or hopefully I will see you on the road.
Oof. Okay.